equity firm Advent International's recent big deal with Coforge has turned attention to its other listed companies here in India, where it holds majority control. Sources share with NDTV Profit that there are certain strategies of Advent which have been a concern for the other stakeholders in those portfolio companies. My colleague Nisha Podar gets us all the exclusive details on this important development.
The Encora Coforge deal was the latest one of Advent International. But there are various companies in the listed space where Advent International has a controlling majority. And I've spoken to several market participants and the ones who have a stake in some of these portfolio companies of Advent who have raised concerns, and the stakeholders have shared with NDTV Profit that the stock market investors in Advent's portfolio companies have raised concern about the value creation by Advent for the other stakeholders in that particular company. The issues are regarding two of the strategies which Advent International follows, which have been seen in multiple portfolio companies where they have a controlling majority. So the concerns are regarding the management changes, very aggressive, bold ones, and exit strategy in the companies with controlling position. Now, Crompton Greaves Consumer Electricals is one such company where Advent exit was seen leaving the company without any direction by most of the shareholders who are still invested and are really trading with losses. Eureka Forbes, Cohance are also on the radar for the management changes, as well as stock slump post the stake sale which was done by Advent International. Let's pick them one by one. In Crompton Greaves Consumer Electricals exit, the Advent's last tranche of exit was at around 400 rupees per share. The stock is trading close to 250 rupees per share, and also investors share that the company was left directionless at the exit by Advent. Also, Advent responded to all our queries point by point. They say 4.3x value creation for other shareholders done over 6 years, and that the MD and CEO of Crompton only changed in April 2023, which was 22 months after Advent sold the stake. On Eureka Forbes, again, the two important aspects, management change by the company and stake sale. Sale was done at 979 rupees per share in Feb 2024 by Advent. It still has majority in the company, but now the stock is trading around 600 rupees levels. They also revamped the leadership in this particular company post their acquisition. So shareholder concern about business and stock performance, where Advent says that the 3x value creation for other shareholders has been done in 3.5 years, and that the promoter brought in the new management team when they invested in the company. Third important is Cohance. There have been many aspects which have been concerning the stock market about this company's performance as well. At 906 rupees per share in September 2025, the stake sale was done by Advent, and the stock is trading around 500 odd levels currently. Now remember that the share sale by Advent was done just few weeks before the CEO of the company resigned, which was in October 2025. To this, Advent's response to NDTV Profit is that the business continues to be led by a strong executive chair along with 3 CEOs for each of the business units, and that as a majority stakeholder in the company, it is committed to the long-term performance and growth of business. Now remember that the private equity players in India have given a lot of growth capital for the companies to really create value for the larger stakeholders as well. So these were some of the concerns which we wanted to put forth on Advent International's listed portfolio.
Thanks so much for that, Nisha. Let's